Mr. Vere, you're going to notice there's a lot that happens in business. When someone sets up a business, the basic idea of setting up a business is you want to make money out of the business. And for you to make money out of the business, there are quite some exciting and fundamental dynamics that you have to know and to understand. And from a customer service standpoint, there are quite a couple of things that you just have to know, that you just have to master, that you just have to understand. For example, you need to understand that customer service is the driver. It is the driver of business success. Without customers, you can't have any business success to talk about. So initially, I will talk about the impact of customer service to the financial profile of the entity. You're going to notice when the business starts running, you obviously should understand that it has an impact on everything that happens. Customer service has an impact on just about anything, Mr. Vere, that happens within the business. Mm-hmm. Poor customer service will impact the company's balance sheet. Now, the balance sheet is just a snapshot summary of your position in terms of your assets, your liabilities, and owner's equity at a point in time. It's like a financial photograph.
Oh, yeah.
If you take a photo of someone today, after 5 minutes, if you take another photo, you may experience a different photograph to the initial picture. So that's the same with the balance sheet. Okay. So your assets, these are things that you just own and that give you value. An asset is a resource controlled by an entity as a result of past events, which will result in an inflow of economic benefits to the entity. And a liability, these are things that you owe other people. These are resources that you're supposed to give to other entities. So a liability is a present obligation arising as a result of a past event, which will result in an outflow of economic benefits from the entity. Now, when they talk of owner's equity, what they mean by that term is they're talking about when you take away all your liabilities from your assets, what you remain with is what is termed owner's equity. That's what accountants term owner's equity. And in other words, the residual interest in your assets after deducting all your liabilities. So poor customer service will negatively affect the balance sheet. It will negatively affect the assets. It will negatively affect the net asset value, the equity of the business, the net worth, the net asset value position.
Okay.
So there is something amazing that every serious entrepreneur should understand as far as customer service is concerned, because it will seriously impact on your financial position. It will seriously impact your balance sheet. Now, poor customer service will also impact on your income statement. Now, the income statement, it is a new term nowadays. They call it the statement of comprehensive income.
Yeah.
The top line of any income statement, Mr. Vere, is your revenue. Now, when you take away your cost of sales from your revenue, you get your gross profit. And from your gross profit, you can then compute your profitability after taking into account, after removing other expenses like your operating expenses, your rentals, your tax, etc., etc.
Oh, yeah, great.
So you see, anything that will happen in the business from a profitability standpoint is the result of how many customers you manage to sell to, how many people manage to then come to your business. So how can you make more profits if you are chasing away customers because of poor customer service?